Hey everybody, welcome to the live stream. Just comment so I know you're here, so I can add you to the list. We do 2 raffles every live stream, and you could win a $20 Amazon gift card. I email it to you. And it was a good week in the markets. The markets went up a lot. I made a lot of gains, which was good. And Alibaba, did we talk about that last stream? Because it was the day before it went up. I had an order in. I was about to put a big order in for Alibaba. I was just about to do it, and then I convinced myself not to. The day before, it jumped up a lot, and then it went up even more. But you don't know that stuff. It might come right back down. So. Hey everyone, thanks for joining and commenting. Does anybody know what this word is in the top right of the stream? What I'm referencing? Epoxy. And the arrow into well, yeah, maybe flooring, but something happened today. I don't know if you guys, something happened with this word. I'm sure somebody here knows what I'm talking about. Like wait, Christian. Wait, what am I doing? Parkash M. Taylor. I can't believe nobody plays this game. Agav, what's up? CHAU. Well, epoxy is, there's a game. It's a really popular game, and this word was part of that game today. I can't believe nobody plays Wordle. That game, Wordle, WRDLE. Every day, it's a New York Times game. Maybe it's a New York thing. I don't know. And then you got to guess the word. And that was today's word, which is really hard. It's usually a lot easier. Can a bus driver? That's probably the best name, right? Can a bus driver? That's the best name in the stream. Yeah, I usually don't play games either, but I got into this one. It's real short. The game. It's like 10 minutes a day. Yeah, epoxy isn't. It's an adhesive. Yeah, that is accurate. Dildar. Okay. Did I get everybody? 20 people. I did a video on I did a video today. Oh, I didn't put it in my that's what. I did a video on tellurian today. some people asked me to do a video. I was a little hesitant. There's a couple of people who always get really upset every time I do a video on Tellurian. They always like bash it, and it's kind of, one guy is kind of annoying. Like no matter what I do in a video, they always say I did something wrong. But I just do it in the morning when I get up. I just always check it, and yeah, Wordle is good. It's good for your brain. It's like Wheel of Fortune, but it's personalized Wheel of Fortune. Dad, this. I guess I'll do the first raffle. Where's Ed? Ed usually comes. He's usually one of the first people too. Is he not here? Did I miss somebody? I think Dave F. HQPP. Okay, that doesn't count. Not 18. 13. It has to change the number. That's the rule. It has to change when I click this box. 15. 9. 18. HQPP. Jason's here. So HQPP, make sure you email me at this email address. Jason S. Kalua. I need a female to teach me how to play Wordle. Other than that, I can keep my attention on it. Do you? It's by email. Just email me, and I'll email you. Hey, Richard, I'll email you the Amazon code. It'll come straight from Amazon. I don't think that's an actual name. I think that's a joke. Or are you joking? I'm going to. Has anybody taken the CFA exam? Oh, Ed, I was asking about you. Where's Ed? We already did the first one. Should have waited. I learned a lot from the CFA exam. I learned way more than undergrad and grad school. So I'm just going through. I'm going to make a video. I'm going through just one of the books. It's the third book in the CFA, the level 1. It's the financial reporting and analysis book, if anybody's familiar with it. So I'm going through that book. Ben, are you on level 1 or 2 or 3? I'm going through and I'm kind of picking out the questions which I think will be good in the video, and I'm going to just talk about them and explain how to get the answer. So it's going to help. I think it'll help the people watching the channel, because a lot of this stuff is kind of, it's not that straightforward, but it's not super challenging either. It'll make sense. A CPA. I was thinking about the CPA. Trying that. The CFA level 1 is kind of, I don't know about easy. Only like 30% of the people pass. It's easier than level 2. But a lot of things on level 1, even if you don't take the test, there's a lot of good information. Like you really could learn really deeply the like how to read financial statements, how to pick them apart, a lot of the stuff in my videos kind of talk about the stuff that's in the CFA exam. But somebody mentioned, and he's not here. Enbridge. CB 350F. XO triple V. Let's do again with Ed. Yeah, we're going to do a second one. Somebody asked me about bonds, and this is in the CFA too. But I just put this together to explain simply how interest rates affect bonds. Something wrong with my live feed. So as interest rates go up, bond prices go down. And as interest rates go down, bond prices go up. It moves the opposite of interest rates. You might understand why, but if you don't, I think you will if we talk about these simple examples. So if you wanted to buy a 1-year 0 coupon bond, so a 0 coupon bond doesn't pay interest. So the way it works in this example is that it's a 1 year. So say you buy it on January 1st and it matures on 12/31. The price of that bond is $95,238. But you get $100,000 after a year. So the interest is built into the principal payment at maturity. Of course, you have to get a return. Nobody would invest for nothing. So the way to calculate the yield for this particular bond is you take the price of the bond, which is $95,238, times 1 plus the yield to maturity, which we don't know, right? So I'll just write it out. Where's Ben? Not Ben Z, another Ben. He's the one who asked. I guess he can watch this stream. So it's a simple calculation. It's just math, a little algebra. So you take the price of the bond times 1 plus the yield to maturity, which we need to figure out, equals the face value of the bond, 100,000. So does anybody know algebra? How do you isolate this YTM value? How do you isolate it? You have to divide both sides by 95,238, right? So you divide both sides by 95,238. So you remove. You remove. You could look at it. You could do everything in Excel, right? So you cancel out the 295,238s because that just equals 1, right? 95. Any two numbers over each other equals 1, right? Yeah, exactly, Richard. I was just showing step by step in case anybody needed the help. Now you have. This is kind of the answer down here, but now you have 1 plus YTM okay, so it's just 1 plus YTM equals 100,000 over 95,238. So when you do that, when you do the math, 100,000 over 95,238 equals this number, 1.05000. So plus YTM equals. I'm just going to put 1.05 because those zeros are irrelevant. So now you have that. And how do you solve for the YTM? You minus 1 from each side. So YTM equals 0.05. This is what I used to do all day. Not these problems, but teach math for 10 years. Too bad Ben's not here. So now you have YTM equals 5%, right? So if you buy, and they do sell zero coupon bonds, and the reason I'm not doing a bond with an interest rate, because there's obviously bonds out there that have interest rates, they're 10-year bonds, 5-year bonds. It's just way too complicated. We probably need a financial calculator, but I just want to show you fundamentally how interest rates affect bond prices. Okay, so if you were to buy this bond, say your bank was selling this or the government was selling this particular bond, you would be given a 5% interest rate, right? And you paid that much money for the bond, 95,238. So what if interest rates so let's just say theoretically this particular 1-year zero coupon bond, which was trading at a 5% interest rate, say rates shot up to 7%, right? I'm not talking about the Fed rates. I'm talking about the rate on this particular bond. If the Fed raises their rates, then rates and everything else goes up. So Fed raises the rates from 0.25% to 0.5% to 0.75%, etc. And let's say next month, 1-year zero coupon bonds are now 7%. Do you think the price of the bond will be higher or lower than 95,238? Because if somebody wanted to buy, if you wanted to buy, or anybody wanted to buy the same exact bond, 1-year zero coupon, 100,000 face, it's not going to be 95,238 anymore, right? Will it be more or less than 95,238? Exactly, because rates go up, prices go down. I did the math. So the new rate, I mean the new price is 93,458. So if you own this bond, this 1-year bond, and let's just pretend it was the next day, because I know if you you could not sell the bond anymore for 95,000 on the open market. If you wanted to get rid of the bond, if you didn't want to wait a whole year to get your $100,000, nobody will pay you more than 93,458, because that's what the bank is offering, or the Fed, or whoever's issuing these 1-year zero coupon bonds. So you have to sell for that amount. So you might have lost 1780. But if the opposite happens, if interest rates go to 3%, then it would go up. Then you could sell the bond for more than you paid, even if it was the following day. Then you could sell the bond for $97,000. But if anybody owns a home, you know what I mean. When rates go down, you get rid of your loan and refinance for a low rate, because even though if you have a 5% 30-year, I'm assuming everything's fixed rate, mortgage, and then a year later it's 3%. Say you were spending $3,000 a month. Even though when rates come down to 3%, it's not like you're paying more money. It's not like now the bank's charging you $3,200 a month. Of course, that doesn't make sense, but your opportunity cost, you could refinance it and bring it down to like 2,600, whatever. But if you take the CFA level 1, you'll learn how to price bonds that have maturity dates, for multiple years, and but it's a little more confusing trying to do this in Excel. But this is the most basic way I could do it, and I don't even think it was super simple. I bought a house in 2019 and never refinanced 2020. 2.35%. Wow. That's crazy. I remember when I refinanced to 3%, I said it's never going to be this low ever again. I sold all my stock, all my stock in my brokerage account in like January and February of 2020, right before the COVID crash. I sold all my stock and paid down my mortgage. I just got real lucky. It came right back up, so it's not like I saved anything, but I thought I saved a lot of money. I wish I just put it all back into the market. Potentially. I have proof of that. I'm not just saying that to make myself sound smarter. But if I would have put it back into the market, I could have made a ton. But, you know, what CFA book do you recommend? Just get the third book. It's CFA level 1. I mean, you don't sign up for the exam because it's like thousands of dollars just to even take the exam. It's ridiculous. Just go on eBay and buy. You probably have to buy all 5 books. I don't think you could buy just one. But the only one I'm really using for my videos, even though I got all 5, is the third book, Financial Reporting and Analysis. But it's really deep and heavy. It's not like fun. It's real. It's really dense material, and you might have to go over it multiple times to get it. I'm going through it now because I'm trying to. It's helping me remember things. Like when I do international companies, now I understand why they do certain things on their cash flow statement. Yeah, I know Dave Ramsey. I like Dave Ramsey. He's one of my motivators for paying you off. But so I saved 3% a year, and I could have made more in the market, but there's not. It's kind of like it's more psychological paying your mortgage off. It's like it's not a money thing. It's like it's a good feeling, and also there's no guarantee in the market. When you pay your mortgage off, there is a guarantee. I'm not paying 3%. So oil has been coming down since that peak. I put out a little like on my news feed. I talked about how I know a lot of people buying oil thinking it's going to keep going up. But if you buy it in the hundreds, I think if you're holding oil stocks for like years and years and decades, it doesn't matter where you buy it, I guess. But some people buying it now thinking it's going to go to 200 a barrel, and it's just not likely. Anything's possible, but I don't think it's likely. Cheap debt is good. The debt is a lot cheaper than equity. Much, because debt is sometimes like is usually below 5%, sometimes even lower, like 3%. But equity can be really pricey. M. Taylor. M. Taylor wins. Anything is possible. But like I was trying to show you guys an example. Like if you had like you guys remember last week, like if you had a jack of hearts, like if we played the game, the Price is Right game, if we played a game higher or lower, and if jack of hearts came out, would you say higher or lower? You would say lower because you're giving yourself the best chance. and if it came out a 3, you would say higher. So I'm just saying, oil, I would say oil is like a jack of hearts right now. Would you say higher? And of course, a queen, a king, and an ace can come out. Of course, it's possible. But why would you put your money into something that's has less of a chance of going up? And I think it might go to a queen. It might go up 10% more, but there's so much more downside potential than upside. But this is only for people who are doing short-term plays. It's not for people who've been holding it for many years. M. Taylor, I think you won once, right? Or I think Ed's the only person who won 3 times, if I can remember right. A couple of people won twice. Also, I'm doing this CFA video, hopefully to get views. Hopefully people who are taking a CFA test watch the video, in addition to the subs, because it's all good stuff. Like, what's the answer to this? So X Corp, this is directly from the CFA textbook. X Corp has 160,000 shares of common stock authorized. There are 92,000 shares issued and 84,000 shares outstanding. How many shares of treasury stock does X Corp own? So what's the answer? Is it A, B, or C? Did you see all the cannabis stocks went up a lot? Because they may get approval on a federal level. That's why, right? But I think it's way too risky. I think cannabis stocks, maybe in a few years, but I don't know. I think it's just too much. It's going to take too long to get. Yeah, I think everybody got this. So when a company has authorized shares, that doesn't mean those are shares available. Only the shares issued are the ones available in the open market. Hey, Rye, what's up? Everybody check out High Rise channel. Thanks for joining. We're talking about CFA. This is a good question because I remember this question when I read it, but it's a little nuanced. So if P Corp, you could think of P as parent company. That's P Corp, and S is subsidiary company. If P Corp purchased all 500,000 shares of S Corp for $15 per share, and so it's an acquisition, they bought the whole company, and S Corp balance sheet has net assets of $6 million. P Corp determined the fair value of S Corp's property and equipment was $1 million higher than reported on its balance sheet. How much goodwill should P Corp report on its balance sheet from this acquisition? Because this is a good learning experience, because I try to explain things like kind of simply so they're not too complex and confusing. But the way I explain goodwill is technically correct, but it's a lot more involved. It's I say goodwill, and I do this almost every video. I say this: goodwill equals acquisition price minus net assets. Do you guys know what net assets are? Like I'm sure some people know what net assets are, but net assets are just assets minus liabilities. Well, the goodwill charity is totally separate from goodwill accounting. So I used to say goodwill is acquisition price minus net assets, which is technically true, but when a company acquires another company, they look at their fixed assets and have to like reevaluate those fixed assets because sometimes they're actually worth more than they reported on their balance sheet, or maybe less. So if they're worth more, in this case, they're saying the property and equipment are 1 million higher than a balance sheet. So the balance sheet is underreporting those assets 1 million. So the real net assets should be 7 million, not 6 million. So it's actually the answer is 7.5 million minus 7 million. So it's $500,000. The way I say goodwill, you would think 1.5 million because I don't want to like go into all these nuanced, but technically they do reevaluate the fixed assets. Does anybody know how, does anybody know how to calculate warrants? That might not be too much fun. But some of the questions on this exam are like textbook questions, which I don't think have anything to do with real life. So I didn't put a lot of questions on here because I didn't think they were applicable at the beginning of the year. Does anybody know how to do this one? It's how to calculate depreciation on this piece of equipment. So at the beginning of the year, and like I said, these are exactly pulled from, I just typed them from the book. I just picked out questions that I liked, that I thought were relevant to the channel. So this, if you do take the CFA, even if you don't, it's really good stuff. So at the beginning of the year, X Corp purchased a piece of equipment for $25K, and they plan to use that for 4 years. I'm not an accountant. I've been asked that by accountants, and I said, I took accounting 101. That's it. And I'm gonna on my video, I learned almost nothing from undergrad and grad school in terms of accounting or finance. Almost nothing. Pretty much everything I learned I learned a lot from this test. I took it a while ago. I did learn a lot from this, but most of my learning was through YouTube and Investopedia and going through the financials. That's where I learn almost everything. Okay. And they sold it for 4K. So that's a salvage value, right? What is depreciation expense for second year using double declining balance method? So should give an amount you can write off each year. So double declining is different than straight line depreciation. So I'll just do so since the useful life is 4 years, they use 2/4 instead of 1/4. 1/4 is straight line. So they're doubling it up. If it was straight line, just in case you might, if you did make a mistake, straight line is 25 minus salvage, so it's 16K times 0.25, which is 4,000. But when you do double declining, you don't take into account the salvage value. In theory, when you do double declining, it would never depreciate to zero if there was no salvage value. But I don't want to confuse you. So 12,250, that's year one, right? Year one depreciation. The answer is asking for year two. So it's just half of 12,250, right? Oh, I messed up. Did anybody see I messed up? 12,500. I put 12,250. I don't know. 6,250. So 6,250. Yeah, nice. CB, nice. If it was straight line, you would do 1/4 of 21,000 the first year. Actually, every year, 1/4 of 21,000 equals 0.25 times. That's answer A would be straight line depreciation. Of course, they put the straight line in there because they want people to pick that as an error. Is this good? Is this Neil? What's up? But it's so nuanced when you read it, the book, and you realize how little you know. But it's filling in a lot of the blanks for me because sometimes I get tripped up on straight line inflation. For what it's worth, we really do appreciate you going through all this stuff. Oh yeah, no problem. Thanks for letting me know. There's a lot of things on like if a company buys, like invest in a security, a bond, or a stock, how that's reported on their financial statements. And it's so confusing. I'm taking notes, and these are all things I forgot. Like I mean, I forgot a lot more too. I just trying to take notes on things like it's just so confusing. But once you do it a bunch of times, it makes sense. Like if a company buys securities, like stocks, bonds, um, if they call them trading securities, because they could call them different things. If they, even though they're all the same security can be called different things. If they label it a trading security, then it's listed on the balance sheet at fair value, which is what they paid for minus depreciation or amortization. And then the unrealized gains and losses and the dividends are reported on the income statement. So sometimes I show you other income and expenses. That's why Berkshire Hathaway has so much in other income and expenses, because they might have these huge, because they report quarterly their financials. So let's just say, for instance, Apple stock in the first quarter of 2021 went down 20%. Like the market crashed. Apple stock went down 20%. Berkshire Hathaway would have to report, even though they didn't sell any of their Apple stock, but they own a ton of Apple. They would have to report like a $300 billion loss on their income statement because Apple stock went down so much. So an unrealized loss. They have to report the unrealized losses on their securities. Same thing if Apple went up a lot, they would have to report maybe a $300 billion gain. So you look at companies like Berkshire, holding companies, and it just doesn't make sense. You see one quarter they made a ton of money, the next quarter they lost a ton of money. And also, like international companies, they use IFRS. So sometimes I see differences when I look at those, but this kind of puts it together. It just so I did Tellurian, and I'm trying out different things on my model. Like it does change every quarter because the company comes out with new financials, of course. But I'm trying to figure out ways to value companies like an EMP company. Because there's no free cash. It's all negative free cash flow and negative net income every year. It went up a lot. It's up like 300% the past month, I think. Tellurian, right? Watch 20% on Friday. Watch the Tellurian video, and if somebody makes a negative comment, just comment on that comment. I'll appreciate that. What am I doing? Tellurian. So just a month ago, February 3rd. It's hard to read this chart. I have to make it easier. Oh, here it is. $2.28. It kind of bought a month ago. So it's doubled. I thought it tripled. So it doubled in the past month. Yeah, a lot of things are. What's gone up the most the past month? Look at the comments for Tellurian. I get so much negativity. It's so annoying. It's up a lot. It was below 80. It got below 80. So it's up almost like 40% in a couple weeks. I think it's a great time to get Alibaba. I mean, the fear was the Chinese government would block them and get them delisted, but they pretty much said they're not going to do it. I mean, look how much it's come down. It's still down like 70% from the peak. I know people don't feel comfortable buying Chinese stocks, but I think that's the best one. I own Momo. I wish I never bought that one. That got down to under $5. Yeah, I think I bought it. Probably around 15 or so, and I end up selling for like 8 or 9. I just couldn't deal with that anymore. DD? This DD? What's you don't mean D that what yeah. DD. If you think that service sucks, I wouldn't get. DD was pretty low. DD got down to like $1.75, and then it was over $4. It's regressed. SLI, Standard Lithium. That was below 5, and the past few weeks are really good. Thank God the market's up, because I have to do a 30,000 portfolio reveal video soon, and I was kind of embarrassed. Now it's not as bad. I bought Amazon. I think I got it around 2,900. So it's been about 2 years, and it barely moved. Just recently, I was down on my Amazon after 2 years. I'm finally back up. I'm up like 15%. Oh, Element Nutrition. Neil, what are you talking about? What are you? Can you buys DD? You mean DIDI? You can buy anything you want. Well, look at it went up. Look at that. That's crazy. I wonder what happened. It must have been like a stock split, right? I mean, it shouldn't be like that, but sometimes the charts get messed up. You could buy any Chinese stock. It's the Russian stocks that I don't think you can buy, right? I want to buy Gazprom. It's $1. I mean, I'll risk it. I understand it might go to zero, but I'll take that chance. They supply all the oil in Russia and a lot of Europe. And they're like, thanks a lot, Thomas. Appreciate it. Who would buy Gazprom? Russia is one of the largest oil producers in the world. I think they're like first or second. United States and Russia are the top. And Gazprom is the largest oil producer in Russia. It's got to go up. I mean, it's risky. It's like buying a stock, a penny stock. It's risky, but I just can't see it. Lukoil, same thing, right? I don't think you can buy it. It was over $100 at one point, and now it's under 7. You can't buy any Russian stock, even if you live in Russia and you have your life savings in stocks. You can't buy it. You can't take money out. You got Gazprom at 213 a few hours before they closed. But it's not about fundamentals. It's just about the fear of delisting and the political fears. It has nothing to do with the fundamentals of the company. Because 37 billion. I don't know the exchange rate. So move the decimal over 689 billion. So it's 6 billion, right? That's 6 billion US dollars of cash? I think that's 6 billion US dollars, and their market cap is 30 billion. Okay. I thought they might have more cash than their market cap. Yeah. Gazprom at 3. FTD, I was able to buy last Friday. It's really risky. It's much more risky than a Chinese stock because China's not in a war and the market is not shut down. And as much as some people might not like Chinese, the way China does things, we do a lot of business with China where a lot of most companies have exited Russia. So it's a different like animal. So it is definitely a lot more risky investing in, but I would still do it. I would buy 1,000 shares of Gazprom if I could. It may be immoral, but it's also it's also possible. Okay, it's been an hour, so yeah, thanks for joining. Hope I do a video of the CFA video soon, so I got to figure out what video to do next. I don't have that much in the queue, but okay. Have a good night, everybody. I'll see you later.